just to see a follow-through day above today's high. But this 124, I think I was on your show, very good support at 125. So today it got to 124, but a ton of support here. And if you just look at an intraday chart, you'll see how that thing came off the low today with basically over 1 million shares on a 10-minute bar right around 1 o'clock when the bond auction was announced. And that's a very good sign of strength here.
Okay, let me ask you a question about this. I see some really good support on the TLT at that 124 area. I agree with you. You've got a hammer on the Japanese candlestick formations. Are you looking at this as a resumption of the trend at this point, or possibly some kind of a range between the 124 and the 132 area?
No, I think there's going to be a resumption of the trend. We undercut the 50 moving average, but if you look at a weekly chart, this thing is in no danger unless it closes below 123 on a weekly chart right now. TLT still is very, very strong. I mean, it was due for a correction. It made a higher high on weaker volume, so it was due to pull back, but TLT looks very good right here.
Got it. And Glenn, thanks for mentioning that lower area, 123 in a weekly close. All right.
Yes, close below that. I mean, that's where you would have to be a little bit cautious that this thing is going to pull back further, but right now I just don't see that in the cards.
Okay, what about the GDX, the gold, the market vector gold miners?
Yeah, that's a gold market vectors gold miners ETF. Very, very strong at the moment, holding up well. But just going to let your listeners in that this thing should not get above 46.30. So GDX, I've probably picked this one off better than anything else this year, highs to lows. But there does not look like there's much strength past that 46.30, 46.50 level.
Okay, so you're looking for greater strength in the U.S. dollar to create more downward pressure in this index also?
Well, I think that would be one catalyst to do it, but something else, gold miners have had a nice little move recently, really since the middle of July, but ultimately I just don't see the strength in there to get through that level I just gave you at 46.30, 46.50. Then we'll get one more final pullback and sell off into the fall season, and I think that's where you want to own the GDX.
Okay, any idea of price targets where you're looking for support into the fall season?
Yes. Right now, I would lean probably towards the mid to high 30s, but we'd obviously need to look at the pattern as that happens.
Okay, got it. Yeah, that's a lot. That's a pretty good trade from here. All right, what about GLD? Well,
GLD is not quite the same scenario, but right now I think the GLD just has a wall of resistance around the 159, 160 level. Ultimately, I'm looking for one more pullback on gold, sharp pullback, maybe into the 150 area, and then I think that should take us into the fall season as well. And then I think traders can start to look to buy gold.
Okay. Are you expecting some fundamental event to occur in the fall with the Fed or something?
Well, I'm expecting another sell-off. So, and that's going to deflate everything. Gold is the greatest indicator, in my opinion, for me, whether there's inflation or deflation taking place in the market. And I think gold has one more drop. And then I don't expect a QE during this Jackson Hole event, which a lot of people are talking about. Therefore, it's still possible that the S&P 500 has a flat month overall. But I do think that we're going to see another sell-off, a pretty sharp one, and then the central banks, whether it's here, Europe, or even China, they're all going to act, and that's going to give us, a big inflationary rally in 2013.
Okay, now let's make sure that we're talking about the right market on this. Big sell-off and big inflationary rally. Which market? Gold, stocks, both?
Everything. Everything's going to go together. They're all going to trade. Gold and the stock market are synonymous. They trade together. The oil markets, everything. It is one trade out there right now. It's inflation against deflation. And all the central banks continue to do is pump up the inflationary possibility, and the markets, move up off of that. But eventually they're going to have to act, and I think they'll act sometime in the late fall.
Okay. JJC, what are you saying about this one?
Well, copper, if you notice, has moved up higher lately. Everything has caught a little bit of a bid. Watch this JJC around the 44.50 level, 45. I really don't see it getting through 45 on the upside. This is the IPATH Dow Jones Copper Index. I really just don't see this thing getting through the 44.50, 45 level with any conviction, and this should also head lower.
Got it. Target, any price ranges you're thinking about?
Well, when this thing starts to fall, I'm thinking 35 to 33. Right now it's trading around 44, 43 and a half.
Okay, and again, this fits into the fall hyperinflation turnaround scenario?
Pretty much. This is exactly it. Copper's been weak already. I mean, this has been the greatest leading indicator for the markets. But right now you've had a little bit of a bounce. Things that have been beaten up, or I think it's just a dead cat bounce in copper. Even the steel stocks, just a dead cat bounce. Don't fall in love with these things. They're going to have one more down move.
Okay, now once in a while you cover some individual equities like J.P. Morgan, the banking index, or Apple Technology. What's your thoughts on any of those?
Well, right now, because if you notice the volume this week, it's been extremely light. So it's been a difficult market to short, hence the old market adage, never short a dull market. That means never short a light volume market. I mean, we can't have any lighter volume than what we're seeing today. We're only at 75 million shares traded on the SPY. But when I look at a stock like Apple, I can't rule out that it won't go a little bit higher from here. It certainly could. But there's no mustard on the sandwich. There's not a lot of conviction behind here. And ultimately, I do think Apple's going to dip again. But right now, it's technically back above the 20 and 50 moving averages. It's going sideways. It's still holding steady. Now, when I look at a stock like J.P. Morgan, I don't see this thing really getting above the 38 level with any conviction. Maybe 38.50, but that would just be about it, and this thing should head back downtown. If it breaks through the 34 level with any real volume, I think J.P. Morgan is a stock that could easily trade back down to $30, maybe even $28 again.
Okay, so I take it you're bearish on the banking industry.
Well, I just don't see a lot of upside in the banking industry, and I'm bearish on the entire market right now. So everything I think will go down, but it's going to lead to a good inflationary opportunity to own stocks when the central banks act on their quantitative easing later this year.
Okay, got it. All right, before you go, give everybody a way to get in touch with you and also to get in to the trading room with you so that you can show them how you pull the trigger on these trades.
Sure. Come on over to In the Money Stocks. You could take a 7-day free trial to our research center to get all of our nightly setup. You'll also get all of our cycle work. If you're a day trader and you're looking, or a swing trader and you want to see what we're doing each and every day, come over and view our desktop. Come over to the intraday stock chat. Again, a 7-day free trial. You have nothing to lose, and most people are very, very happy once they sign up.
You have any webinars coming up?
We do have the next webinar, I believe, Michael, is going to be the end of the month. The last Saturday of August is going to be our next one. But for the members, every Sunday night and Wednesday night, we do host a No Hype Live where we take questions from all the members and we go over all the individual stocks that any trader is looking at.
Great. Thanks so much, Nick.
Thanks for having me, Michael. Have a great day.
You too. Everybody, Nick Santiago, President and CEO of InTheMoneyStocks.com.